When the tide pulls back, most people run from the shore. I have learned to walk toward it. There is a particular silence that arrives before opportunity. It does not announce itself with certainty. It does not feel heroic. It feels uncomfortable. The air becomes heavy with doubt. Conversations turn cautious. Experts grow confident in their pessimism. That is when I begin to pay attention. I bought when everyone was afraid because I learned early that fear distorts vision. It narrows the mind. It compresses time. Intelligent people begin to think only in weeks instead of years. They trade long horizons for immediate relief, and relief is expensive. In my early years, I made the mistake of confusing activity with progress. When prices moved sharply, I felt the urge to respond, to prove I was alert, to prove I was decisive. I discovered quickly that the market does not reward restlessness. It rewards preparation. Silence became my preparation. I would sit with annual reports long after others lost interest. I would study management behavior during calm periods because crises reveal character, but calm reveals discipline. I learned to value businesses as if the stock market did not exist. Price was an offer, not a command. Then, one season, the offers became irrational. Fear had entered the system. Good companies were being sold alongside bad ones. Strong balance sheets were punished with the same severity as weak ones. The herd had decided that safety meant exit. But herds do not analyze. They react. In the forest, when one animal bolts, others follow without confirming the threat. It is a survival instinct. In markets, that same instinct becomes self-sabotage. The movement itself becomes the signal. I have never tried to eliminate emotion. I have tried to outlast it. Wealth, I discovered, is an invisible game. The loudest players rarely win. They attract attention, and attention changes incentives. Once people know your position, they adjust theirs. Once they know your strength, they prepare defenses. Once they know your weakness, they apply pressure. So I learned to guard what matters. I never reveal my exact net worth. Not because I am secretive, but because numbers create narratives in other people's minds. If they believe you are smaller than you are, they dismiss you. If they believe you are larger than you are, they study you. Both interfere with freedom. I once watched an investor proudly disclose his expanding fortune. The admiration was immediate. So was the scrutiny. Competitors reverse-engineered his holdings. Journalists dissected his methods. Acquaintances approached him with ideas they would never have presented before. His time became fragmented. His focus diluted. Wealth exposed becomes wealth distracted. When I buy during widespread fear, I do so quietly. I never announce my next move. Markets are ecosystems. If you reveal your intentions too early, the environment adjusts. Prices shift, bargains evaporate, the advantage shrinks. Strategy thrives in obscurity. There were times when I accumulated shares of businesses that few wanted to discuss. The headlines were dark, predictions were dramatic. Yet when I examined the underlying economics, the long-term picture remained intact. Customers were still buying. Cash was still flowing. Competitive advantages were still present. The fear was emotional. The value was mathematical. That gap between emotion and mathematics is where I operate best. But silence serves more than strategy. It protects against envy. Envy is subtle. It does not always look like resentment. Sometimes it looks like curiosity disguised as praise. Sometimes it sounds like harmless comparison. Yet beneath it lies a quiet discomfort. Your progress becomes a mirror reflecting someone else's hesitation. I have seen partnerships deteriorate not because of poor economics, but because one partner advanced faster than the other expected. I have seen friendships strain under the weight of comparison, not openly, quietly. The more visible your success, the more energy others spend measuring themselves against you. So I learned to let results compound in private. Being underestimated is an asset. When people assume you are cautious, even conservative, they lower their guard. They compete elsewhere. They overlook you in negotiations. Underestimation creates room to maneuver. In negotiations, I often allowed others to speak first. They revealed more than they intended. They disclosed urgency, ego, fear. Information flows toward patience. Those who rush to fill silence surrender leverage. Information is leverage. Over decades, I built what I call the silent advantage. It is not a tactic. It is a posture. It is the discipline of withholding what does not need to be shared. It is the habit of observing longer than speaking. It is the commitment to long-term positioning rather than short-term validation. Validation is a dangerous currency. It feels rewarding, but it encourages exhibition. Once you begin performing success, you must sustain the performance. That pressure alters judgment. I have watched executives make acquisitions not because they were rational, but because they were visible. I have seen investors double down publicly to avoid appearing wrong. Ego turns flexibility into rigidity. Flexibility is survival. When everyone was afraid, my advantage was not bravery. It was liquidity and patience. While others deployed capital aggressively in euphoric times, I waited. I allowed cash to accumulate when opportunities were thin. Critics called it lazy. They mistook inactivity for incompetence. But patience stores energy. A tree does not grow faster because it is praised. It grows because its roots are deep. In prosperous seasons, I deepen roots. In fearful seasons, I extend branches. I have also been deliberate about inheritance. Wealth without context can weaken character. I have seen heirs burdened by abundance. When comfort is guaranteed, hunger fades. Without hunger, growth slows. Money should enable exploration, not replace effort. I never allowed the assumption that wealth would remove responsibility. Resources can open doors, but they should not eliminate the need to walk through them. Character compounds like capital. If you distribute capital without discipline, you erode both. Another quiet rule I follow is never broadcasting charity, success, or personal pain. Public generosity often invites comparison rather than inspiration. Public pain invites analysis rather than empathy. Both shift focus away from substance. When success is consistently displayed, it attracts not only admiration but calculation. People begin to evaluate what they can gain from proximity. Motives blur. Silence clarifies relationships. There were periods when markets collapsed so sharply that even disciplined investors questioned their convictions. I remember nights reviewing financial statements, not because the data had changed, but because the mood had. The numbers remained steady. Revenues continued. Margins fluctuated but endured. Yet the atmosphere suggested catastrophe. Atmosphere is not analysis. In those moments, I would ask myself a simple question. If the stock market closed for 5 years, would I still want to own this business? That question removes noise. It replaces speculation with ownership. Ownership demands a longer horizon. The crowd lives in quarters. I prefer decades. Time smooths volatility. It also exposes impatience. Those who require constant confirmation rarely hold positions long enough to benefit from compounding. They trade discomfort for motion. They interpret stillness as risk. Stillness, when supported by understanding, is strength. There is a psychological comfort in joining the crowd during decline. If everyone is selling, your sale feels justified, responsibility disperses. But when you buy while others retreat, accountability concentrates. You stand alone with your reasoning. Solitude tests conviction. I have been wrong. I have misjudged management. I have underestimated disruption. But even in error, the discipline of silence protected me. Because I had not declared certainty, I could adjust without humiliation. Because I had not sought applause, I did not fear losing it. Privacy preserves adaptability. The invisible game rewards durability over brilliance. A single dramatic move may attract attention. A series of disciplined moves builds fortune. When I think about wealth, I do not think about luxury. I think about optionality, the ability to act without pressure, the ability to wait without desperation, the ability to say no without consequence. Those abilities require more than capital. They require restraint. Fear cycles through markets with predictable regularity. Each time it feels unique. Each time experts explain why this decline is different. And sometimes it is. But human behavior remains consistent. Panic compresses prices below intrinsic value. Euphoria stretches them above it. I do not attempt to time emotion perfectly. I position myself to benefit when it swings too far. The silent advantage rests on 5 quiet disciplines that shape my decisions. Guard your numbers so they cannot define you. Guard your next move so it cannot be countered prematurely. Guard your edge so it is not diluted. Guard the character of those who inherit so wealth strengthens rather than weakens. Guard your triumphs and wounds so they remain sources of clarity, not spectacle. None of these disciplines are dramatic. They are subtle. But subtle habits, repeated over decades, create disproportionate outcomes. When everyone was afraid, I saw mispricing. I saw opportunity wrapped in discomfort. I saw assets offered at discounts because their owners valued sleep more than analysis. I value analysis more than temporary comfort. That does not mean I am immune to doubt. Doubt visits regularly, but I have trained myself to separate feeling from fact. Feeling is immediate. Fact requires inspection. When the two conflict, I default to inspection. Inspection reveals reality. Over time, I have become less interested in being impressive and more interested in being correct. Impressiveness fades. Correctness compounds. The world often confuses visibility with influence. True influence, in markets and in life, is exercised quietly. It is embedded in contracts, in ownership structures, in patient accumulation. You rarely see it happening. You only see the results years later. Buying when others are afraid is not an act of defiance. It is an act of alignment, with value, with time, with discipline. It requires emotional independence. It requires tolerance for temporary discomfort. It requires faith in analysis over atmosphere. And it requires silence. Because the moment you seek validation for your courage, it ceases to be courage. It becomes performance. I have no interest in performance. I am interested in durability, in compounding, in quiet strength that does not require announcement. When fear returns, and it always does, I will not search for reassurance. I will search for imbalance. I will examine fundamentals. I will compare price to value. And if the gap is wide enough, I will act. Quietly. The tide will pull back again. The herd will run. The noise will rise. And I will walk toward the water, not because I am fearless, but because I have learned that in the space where others retreat, advantage waits in silence. The strongest positions are built without witnesses.